Imagine you owe $28,000 on a car that's only worth $24,000. Then it's totaled. Who covers the $4,000 difference? Yeah, that's a big oof. Stay tuned to find out. What's up, everybody? We are starting right now. And today we're diving deep into something nobody likes to think about. But that could save you a ton of headache and cash down the line, gap insurance. We're talking about that dreaded moment when life throws you a curveball, like totaling your brand new ride. In today's video, you'll learn what gap insurance is, why it's critical for financed or leased vehicles, and the three main types you can choose from. We'll break it down so you can make the right call for your specific situation. Let's get started. All right, so you just drove off the lot in your shiny new ride. You're feeling good, right? But here's the thing, that new car smell fades fast, like crazy fast. In fact, in its first year alone, a new car can lose up to 20% of its value. Ouch, right? And it keeps on depreciating from there. Now, let's say you finance that beauty. You've got your monthly payments, you're chipping away at the loan, everything's cool. But then, disaster strikes. You're in an accident, and your car, let's face it, is officially toast. Totaled. Gone. Here's where things get interesting. Your car insurance company steps in, assesses the damage, and says, okay, your car's current market value is $24,000. Here's a check. Sounds good, right? Not so fast. Remember that loan you're still paying off? Let's say you still owe $28,000. That means you're on the hook for a whopping $4,000 difference, even though you don't even have the car anymore. That, my friends, is what we call being upside down on your loan, and it's not a fun place to be. This is where gap insurance swoops in to save the day. Think of it like that friend who always has your back no matter what. Gap insurance covers that difference, that gap between what your car is worth and what you still owe on it. So instead of forking over an extra $4,000, gap insurance steps in and says, we got you. No stress, no financial burden. You walk away clean. Pretty sweet deal, right? Okay, so now that you're convinced gap insurance is a good idea, and trust me, it is, let's break down the different flavors you can choose from. Because yes, just like ice cream, gap insurance comes in different varieties. First up, we've got financing gap insurance. This is your classic bread and butter gap coverage. It's designed for those who finance their car purchase through a bank, credit union, or even the dealership itself. If your car's totaled, this type of coverage swoops in and covers the difference between your loan balance and the car's actual cash value. Next, we've got lease end gap insurance. This one's specifically for all you leasing legends out there. Leases often come with strict mileage limits and wear and tear guidelines. If you exceed those limits or return the car in less than perfect condition, hey, it happens. You could be hit with hefty fees. Lease End Gap swoops in to cover those pesky charges so you can say peace out to your lease without emptying your wallet. Last but not least, we've got Rollover Equity Gap Insurance. This one's a little more niche, but super helpful in certain situations. Let's say you're trading in your old car for a new one, and you've got some positive equity, meaning your old car's worth more than what you owe on it. Sweet. You roll that equity over to lower the loan amount on your new ride. But what happens if your new car gets totaled before you've paid down enough of that rolled over equity? You guessed it. Rollover Equity Gap swoops in to cover the difference. Think of it like this. You trade in your old phone, which is still worth $300, to put towards a brand new $1,000 phone. You now owe $700 on the new phone. But then you drop it and crack the screen beyond repair. Rollover Equity Gap will cover that remaining $300 you were still owed for your old phone, so you're not stuck paying for two phones when you only have one that works. Makes sense, right? Now let's talk about everyone's favorite subject, money. How much does gap insurance actually cost? Well, it varies depending on where you get it and a few other factors. If you buy gap insurance through your car dealership, which, let's be real, they'll definitely try to sell you on, it's usually bundled into your loan and can add a few extra bucks to your monthly payment. Convenient? Sure, but also potentially more expensive in the long run. On the other hand, you can often snag a better deal by going directly to your auto insurance company. They might offer standalone gap coverage at a lower price than the dealership. It's worth shopping around and comparing quotes to see what makes sense for your budget. Now, for the million-dollar question, do you actually need gap insurance? Here's the deal. If you put down a hefty down payment on your car, like 20% or more, or you're financing it for a shorter term, think 48 months or less, you might be able to skip it. But if you're like most people and you put down a smaller down payment, or you've got a longer loan term, gap insurance is a no-brainer. It's especially crucial if you're leasing, as those lease agreements can be brutal if you're not careful. It's also a good idea to consider gap insurance if you're driving a car that's known to depreciate quickly. We're looking at you, luxury SUVs and sports cars. Those bad boys lose value faster than you can say depreciation. Ultimately, it's all about peace of mind. Gap insurance is a relatively small price to pay for the reassurance that you won't be left drowning in debt if your car decides to call it quits unexpectedly. So there you have it, folks. Gap insurance in a nutshell. It might not be the most exciting topic, but it's definitely one of the most important things to consider when you're buying or leasing a car. Remember, that new car smell fades fast, but that loan balance sticks around for a while. Check your loan balance versus your car's estimated actual cash value after the first year. If you owe more than your car is worth, seriously consider adding gap insurance before you hit that mileage or lease end cutoff. Trust me, your future self and your wallet will thank you. As always, thanks for watching, and I'll catch you in the next one.